I think 150 is in the bag, and I'm just going to stick with that. I think we're going to 150, and I think there could be a positive above that if things go as I think they are going to go. There are a couple of things that I just can't predict. Like if they don't approve GBTC converting, right? Barry had to resign. Why did Barry have to resign? Is he under investigation? Is he not? I mean, maybe like CZ, you resign and they leave you the rest of the company alone. I don't know, but that's a weird outcome. So maybe that means they are gonna. So if they didn't approve GBTC converting, then that 25 billion was going to be selling pressure, right? That was going to have to get converted into the BlackRock fund. And so that would temper the demand, right? Because there'd be just a swap. Whereas if they do allow that conversion and the fees just go down and people don't have to sell that puts more pressure on the upside. So I can't predict that one because I don't have any inside baseball on Gigi's view on Barry and Michael. So I'm going to stick with 150.
Mark Yusko is the Chief Investment Officer and hedge fund founder of Morgan Creek Capital. He predicts over the course of 2024, we are going to see a Bitcoin price of $150,000 or more, over a 200% increase from current prices. He also believes we are moving into a 4-year period which is going to be marked by massive innovation with exponential moves upwards in the prices of Bitcoin and crypto. Mark argues that the combination of events, including a spot Bitcoin and Ethereum ETF, as well as the Bitcoin halving, is going to fuel crypto from being worth $1 trillion today to over $15 trillion. Make sure to stick around to the end of the video where Mark explains why he's also extremely bullish on Ethereum and why he's not yet sold on Solana. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 40,000 others in becoming a better crypto investor right now. Now here's Mark Yusko on why Bitcoin will hit over $150,000 over the course of 2024.
We are days away from the beginning of the most fun 4 years we've had for 14 years, right? Not since 2010, when you had the solo mo boom, and the next 4 years of social media and connectivity and carrying this around 100% of the time. It was awesome. And 96 to 2000, some people weren't around, but I was there. So much fun. I mean, I had so much fun from 96 to 2000. And then 2000, 2002 wasn't much fun. But on the other side of that, the companies that were built, this is the time. And this next 4 years in the digital space, in the digital realm, it's going to be unbelievable. The thing that I can't, well, I'm struggling for the words here, but I can explain it rationally, but there's part of me that says, no, there should be something else in the formula, in the difficulty adjustment, because the fact that the block rewards get cut in half means the price has to double or the miners are done, right? Because the miners adjust, the costs adjust to the price and they buy more equipment and they're running not at monster profits, but, and so if you look at all the previous cycles, the fair value doubled. Well, but isn't the difficulty adjustment supposed to, but I don't think it can. And I think, and so just that alone, right? Just the thought in people's brain that suddenly this is not a $50,000 asset, it's a $100,000 asset, I think could trigger a level of FOMO, partly because at some point we just got to go to Satoshi's, I think, personally. Like, I don't want to be Berkshire Hathaway and have this unattainable price, and because the average person should understand that you can buy a fractional piece, but they don't really understand. They just hear the Bitcoin price. I would much prefer to talk in Satoshis. And so then there's enough for everybody. Like right now, 21 million Bitcoin, someone did the calculation. It's like 0.00128 Bitcoin per person in the world. Now, not everyone in the world is going to have some. I mean, just not, because there's a bunch of people without electricity and all kinds of stuff. But that's a really small number for just the average person to just, although I take that back, right? People buy Doge at 0.00000, whatever it is, or Shiba, maybe Shiba, this point, like 7 decimal points of zeros. Like just split that so you get a real number. I think what's getting lost, to exactly your point, Bitcoin is an institutional asset, but it also is, if you believe this as I do, if Bitcoin is the new base layer of money, right? Base layer of money, which is what gold has been for 5,000 years. Every central bank buys gold, puts it as the base layer, then they issue debt on top of that as currency. And then we all use credit cards and loans. And so you build this stack of quote unquote money, but the only real money, right, an asset that exists in the absence of a liability, is the base layer.
Yeah.
As Bitcoin replaces that, okay, because think about it, what people are talking about, people aren't talking about, I'm gonna put all my money in the Bitcoin ETF. They're talking about 1% or 2%, right? What is that? That's a gold allocation. How much gold does the average, even if you actually boomer, I don't know, 3, 4%? It's not like they have 40% in gold. It's not like they have 50% in gold. And why do you have any? Well, it's my hedge. Okay. Hedging instruments are small allocations that have asymmetric upside potential in untoward outcomes, right? Hyperinflations, recessions, whatever. Why do people own gold? They own gold because it outperforms in times of difficulty, right? It zigs when everything else zags, and it over time accretes value because it holds its value relative to the asset you price it in, right? An ounce of gold is always an ounce of gold. Always. But we don't price it in gold, right? We price it in dollars or yen or euros. Same thing with Bitcoin. One Bitcoin is one Bitcoin. It's just a digital form of this beautiful asset that existed for 5,000 years, where the stock, the amount that exists relative to the flow, the amount that's created new every year versus what's lost or stolen, it's pretty low. So the stock to flow ratio is very high. Bitcoin actually now is higher. And so in that world, it's exactly as you described. Bitcoin is kind of like I have some, it's my hedge against disaster. It's my FU money, my run-in money, whatever you want to call it, and institutions, the big ones, central banks, are going to start buying it. And then ultimately it displaces gold in a digital world as we move completely from analog to digital, and everything's digital, which I think is going to be the case. In that world, that is the base layer. And then all this other tech stuff, and whether it's Ethereum, and now you got the Solana people saying, oh, look, ours is much better. And it's so funny because I have this, I'm of two minds of this. I believed what the people told me, that Solana had fixed their problems. And the price says they have. And I've been talking to some other people saying, are you freaking crazy? No, this is just a pump and dump. This is a bunch of people pumping the stock. I mean, that's not pumping Sol so that they can liquidate the FTX bag, and everyone's going to be very sad when that happens. I'm like, oh, so you mean they haven't fixed the transactions? And the guy sent me a log of all these transactions that didn't go through. I'm like, but they told me they fixed that. So they lied. And then you have the problem of the increasing supply. From the last time Solana was $265 or whatever to today at just over 100, we've increased the supply by 100 million tokens. Wait a second. So I think ultimately tech wins, and where the developers develop, which ain't close. Ethereum, it's like 89% of developer activity. I think that's the number. It's not close. And so there was the quote, if Ethereum didn't exist today and was just invented, would anyone use it? Given the price difference between Solana and Ethereum, well, based on price, no, but based on efficiency, effectiveness, and stability, yes, because arguably Solana is not fixed. Now, the Solana people can tell me I'm wrong, but multiple people have said no, it's not fixed. So to the point, Bitcoin, just by the law of large numbers, even if we're right and it doubles or trebles from here, that's a great outcome, particularly in 12 months. An amazing outcome for most investors. But it isn't the big return that the speculators want. And this is, as you were describing before, remember, there's investors, there are traders, there are speculators, and there are gamblers. It's the hierarchy of, and maybe it should go like this. There are investors, then there's traders, then there's speculators, then there's gamblers. Maybe at the bottom of the barrel as opposed to the top. And the investors buy assets that are below fair value. So we can determine the fair value of Bitcoin. It's below the fair value. We should be accumulating it. And this is one of the most amazing accumulation patterns I've seen in a long time. The last 12 months of Bitcoin, a beautiful chart. Ethereum, kind of the same way. If you believe in this, usage of Ethereum in terms of where everything's being developed and all the L2s, and you say, those are investors. Then you get down to the traders who are, I just need movement. And that's a little bit what's happened in Solana. I mean, maybe there's some people that really believe in it, but there's definitely some trading going on there. Then you got the speculators who are, give me the new stuff. Give me that new, dog token or, fish token or whatever. Well, the problem is when you get to the degenerate gamblers, right? Who are using house money, borrowed money, and they're speculating in stuff that they don't really care about, nor do they don't want to know about the tech. All they want is number go up and get rich, get me rich. And that's been going on forever. And I love your analogy of a commodity boom. And it's funny because I'm in San Francisco. So I wrote Digital Gold Rush when I was in San Francisco, actually in Eureka, California, believe it or not, not truly had my Eureka moment in Eureka, California. But I came out here in 2017 with my family and we were driving up through the Redwood Forest and it hit me that this was exactly the digital gold rush. Yeah. And I went back and I did all the history of Sam Brannan, who was the first millionaire, and he had the general store and Yerba Buena and all this stuff. And that's exactly what's happened. It's exactly, and to your point, gold, silver, copper, lead, all these other commodities got found while everyone was searching for the gold. And turns out we use a lot of lead, we use a lot of copper, we use a lot of silver. And all of that commodity boom is this supply and demand. And to your point, supply is one piece of it, but demand. I mean, think about the amount of silver that's needed as we electronified the world, right? Produced computers with all the soldering and think about the copper that's needed as we electrified the world. I mean, I was down in the subway. They built this new subway in downtown San Francisco for the first time in forever. And they have it's an electric train, and the copper wire that conducts the electricity, it's not like the third rail in the L in Chicago. I want to know how much that cost, because it's like this big around. That is a very valuable piece of, I'm surprised someone hasn't tried to steal it, but you probably get shocked. But that commodity analogy is really important. And I like how you phrased it, block space, because that's why I'm so bullish on Bitcoin long term, not just as digital gold, but as the base layer of the digital age, right? Where every high value asset, if I have something that I really, really care about, I want it on the most secure, most stable, strongest network chain. So, I'm going to put my asset ownership, digital property rights, right, away from the word NFT to digital property rights. I want them to settle there. I may use other blockchains for other transactions. If I want to send a USDC to somebody cross-border really fast, yeah, the Phantom wallet is pretty good. I will say it was pretty good.
So there's Mark Yusko. It's evident that his outlook on Bitcoin and the broader crypto market is not just optimistic, but rooted in deep analysis and understanding of market trends. His prediction of Bitcoin reaching $150,000 in 2024, backed by a series of pivotal events, including the launch of a Bitcoin ETF and the anticipated Bitcoin halving, paints a picture of a transformative period in the world of crypto. Mark's insights into Ethereum's potential and his cautious stance on emerging players like Solana offer a balanced view for investors looking to navigate this rapidly evolving space. His emphasis on innovation and growth over the next 4 years underscores the significance of staying informed and adaptable in the crypto market. If you're keen on staying ahead in the crypto world, don't forget to subscribe to my daily 5-minute crypto newsletter. With over 40,000 subscribers, you'll be joining a community of informed investors getting the latest expert predictions, breaking news, and top on-chain analysis. Just click the first link in the description to start enhancing your crypto investment journey. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.